Radhesh, hi, good to have you with us. How have you been?
Very good, absolutely, Ashu, and good to connect with you after some time.
Well, Radhesh, this couldn't have been a better day, right, for having this conversation, right? And indeed a long time, right? We have not had a chance to speak in I think in the COVID times, right? I think it's been a difficult one for I think each one of us. But I hope everybody is safe at home, at work, across your portfolio.
Absolutely, all well, and by the grace of God, all investments are going in the right direction and are scaling pretty well.
Wonderful. That I keep reading about, right? The investments and the performance I keep reading about, right? So that's a good one, right? And congratulations on a great selection that you've been, you've done and you put together. And I think through the conversation we're going to talk a little more about Arka VC, right? And the focus areas that you have, right? And I think you're one of those first people, Radesh, who essentially had a very sector focused thesis, right? And I think now across the newer initiatives, right? You're looking to sort of expand that the depth and breadth, right? And like I said, we'd love to talk a lot about all of that, through the course of the conversation. But before we do that, right, I'd love you to take me through, your professional journey. You've been with IBM for a very very long time, right? You've been a working professional. From that, you transitioned into being, a fund manager, right, with Arca. Tell me a little more about that journey, right? You've seen the markets go through transitions, right? You've seen many, many large organizations transform, right? Accept digital, imbibe digital, right? Distribute digitally, make more processes very efficient, transparent, right? So, like I said, right, you've been through that very interesting phase, right? Tell me a little more about it, and from there we take it off for the Arca journey.
Absolutely, Ashu. Yeah, so I think I'll give a brief background about myself.
Sure.
So I am a pass out of I did my engineering in '94 and then worked for a few years in a steel plant. And then post that, I did my MBA from one of the top colleges in India. And then
Mhm.
post my MBA in 2000, I basically started my career in IBM as
Right.
a tech specialist, and then went on to be a software architect in the
Right.
software division of IBM, where I worked like with enterprise client system integrators and ISVs.
Right.
And I was designing solutions for them across a whole array of technologies, right from application servers to databases to uh, integration to portal
Right.
to content management to security to business intelligence, data warehousing, infrastructure management, application monitoring, and many of these were pretty complex and first of its kind. And
Right.
I also used to lead them towards sales closure. So that was a very good exposure for me from a technology perspective, sales and channels perspective. And the last 3.5 years, in my 17.5 years of stint in IBM, I was heading the startup initiative of IBM India.
Right.
When that's where we met, Ashu, if you
Right.
recollect.
I do. I do.
I still remember coming to meet up with you in Delhi office, I guess.
Yes. Yes.
Yeah, yeah. So that's where I took it as a strategy to work only with B2B startups, and
Right.
because IBM has a strong pedigree around technology and
Right.
enterprises, and so it kind of made a lot of sense for us to just focus on B2B startups. And given there were a lot of many accelerators, corporate accelerators, they were
Right.
there, and we had to make it handed to be like a very good strategy to play only and focus on to the B2B startup, and that worked out very well. So in 3.5 years, we started from zero, like base and startups in India to 11 startups part of the program, and then IBM Cloud division was getting substantial revenues from the
Right.
startups. And also, what I used to do is I used to work with a lot of startups, helping them on different aspects of the business, and also used to connect them to the customer ecosystem of IBM. And the startup benefited a lot through that as well. And every year I used to conduct a B2B startup challenge called IBM India Smart Camp, where I used to pick some of the best B2B startups in the country
Right.
and get them to present before VCs, CXOs, and that's where again we work very closely. I guess one of the
We
smart
did. We did. We did.
and so even one types now IBM India Smart Camp, they get a list of all the list of finalists and winners, and quite a few of these startups that had picked up based on their subsequent financing from
Right.
VCs, and they have scaled pretty well. So that was the genesis about how about having a very focused B2B fund, which not only invests but also mentors,
Evangelizes.
mentors them and also connect, get them the right connections in the ecosystem.
Right.
So, and that's where I approached quite a few funds. A couple of funds got interested, and Bloom was one of the funds which got interested in this idea, and they
Right.
came in as an anchor investor. And we have two more. We had two more anchor investors from the Valley.
Right.
So that's how. And then I raised the subsequent money from investors in Valley as well as family offices
Right.
in Middle East, and so that's how the fund was formed, and with the whole thesis of investing in B2B startups from India who are looking into
Right.
the US markets. And obviously, at that point of time, we had some of the success stories coming up from
Right.
Jova, Freshworks, iCertis, which were unicorns, and they had the same model of having a base in India, but their client focus was in US and
US.
Europe.
Right.
So, and we basically were looking to invest in these kind of startups early in the journey to help them to get to the market there.
Right.
So, and right now there are 11 startups which are unicorn, which are having a unicorn status with bases in India, but focus on the US markets and the European markets. The recent one being, I think, Mindticker. So I think the space is now pretty much, I guess, heating up. And we were one of the first to set up this kind of fund with this kind of investment thesis.
Right.
And so I think there's a lot of play here for a lot of scope for doing good work in this particular space. If you see
Right.
the 80s and 90s, it was all about services companies from India who were planning to go global with
Right.
arbitration prices, but almost same as getting the same quality. A lot of examples like TCS, Infosys, Tech Mahindra, which have done extremely well in this particular model. I think the next wave is going to be around product companies from India
Right.
who are going to make it big. And I think we are seeing just the beginning of that wave.
Very interesting, Radhesh. Right. I think Radhesh, in line with, of course, with what you've done, right? And I think B2B is in a very, very difficult ecosystem, right? Right. I mean, as soon as you start thinking B2B, I think COVID has been a very, very different time, right? I think it's been an aberration. But I'll come to COVID a little later. But I think B2B largely has been looked at as a very bureaucratic system, right? Right, and not just, for example, say in India, but I think even if you're operating internationally, right? I think there is this, huge requirement that founders need to understand that ecosystem better, right? And I think large enterprises also look at a lot of consistency, right? But while of course we start answering all of that, right, and we start talking about all of that, right? But before we do that, I'd love to understand a little more about the construct of Arka, right? Right. Who are the key participants in Arka, right? What is the fund size? B2B, of course, you've said, right? But what are, say, some of the subsets of the B2B thesis that you have, right? I'd love to understand a little more about all of that.
Yeah, so Ashu, like the investment thesis of Arca is basically to invest in B2B tech startups
Sure.
from India who are basically looking into the US markets. And what we do is that we not only provide investments, but we
Sure.
also provide mentoring and also provide connects to the ecosystem folks. So I'll give a few examples of mentoring, given my background around
Right. Right.
technology sales and channels for the last 17 and a half years. And so I provide very specific inputs on product market fit, go-to-market
Right.
channels, and branding and marketing.
Right.
And then basically also like we have in our network LPs who have invested in Arca. They are in like senior positions in enterprises,
Right.
and they have certain set of expertise. I bring
Interesting.
them in, and so that's basically one-on-one discussion between the subject matter experts with
Right.
the portfolio companies. And then we have in our network a network of angel investors, network of funds where we connect the portfolio companies to this particular network for either co-investment or for investment on the next round.
Right.
And we also have a network of partners with whom the portfolio companies can partner. Examples are
Mhm.
KPMG, Accenture, TCS, Tech Mahindra, and basically we also have a network set of customers in US and India, and
Right.
wherever possible we make those introductions and connections. So that's basically on the mentoring part, and
Right.
connects to the right set of folks in the ecosystem.
Fantastic. Right. But, I mean, Rajesh, when you look at B2B, right, I mean, B2B is something which can be cut in many ways, right? And there are startups that are solving for very specific problems, right? So, for example, I mean, Freshwork is something which is essentially solving the CRM related problems, right? And issues,
Yeah,
right?
yeah,
And then, of course, and then there are, of course, startups that are, say, for example, deep tech solution, right? That they're working on deep tech solutions and so on and so forth, right? So I think startups are, I mean, there are like a variety of startups that are coming up, right, in the B2B
absolutely,
space. How do you
absolutely.
prioritize, right? Because I think it's and all of these businesses have a very different, like I said, conversion cycles, right? The funnels behave completely differently, right? The adoption is again, very interesting and complicated also at many levels, right? And I think one thing which is a constant, right? When you talk of large enterprises, when you talk of B2B, is the ability for startups to consistently deliver, right? Large corporates essentially are very uncertain of the life of a startup, right? Because it's essentially the way a lot of these startups are structured, right? If they do not raise a consecutive round, it just becomes so much more difficult for them to operate and offer what they're out there to in a consistent way, right? That becomes a huge continuity risk for many of the large enterprises, right? I mean, how do you solve for all of those issues, right? Some of them are, of course, cosmetic issues, but some of these risks are very real, right? How do you
Yeah,
prioritize between all of these subsets within the B2B space?
yeah. So in terms of the B2B startups, one is basically where uh, you know they have to make that sell to the enterprises, basically direct sell that they have to make,
Right.
and typically the approach is basically around account-based marketing. And then there are another set which is product-led growth, where they create that demand for enterprises to come in and then try out that particular product, and then consume that. And then there is another set which is a combination of outreach and then inbound and outbound. So basically now if you take the outbound, completely outbound, so basically the typical ticket size here would be around 200K to somewhere around 500K to 70K, depending upon how they can close the deal.
Interesting.
And that the sales cycle is also on the longer side. It
Right.
starts from like 3 months to anywhere it can go beyond like 6 months and 9 months and
Right.
stuff like that. Now here, what happens is that what some of the companies are doing is to elevate this whole risk for the enterprises, and typically
Mhm.
these are large tickets that are coming from the enterprises. So
Right.
what they do is that they do like a small pilot
Mhm.
where they show a proof of what they have in store,
Interesting.
and basically show those value points to the enterprises. And once the enterprise is convinced about that, and
Mhm.
typically these are all paid pilots, so
Right.
which they do it. So it's not a much long, big
Interesting.
investment from the enterprises,
Right.
and they get started and they see the value. And once they basically roll out on a particular, for a particular division or for a
Right.
particular unit, and then basically then they, like, if that goes successfully, then they expand to other divisions or other geographies. So that's how startups would like to elevate that risk of for the enterprises, if they
Right.
have to do a large big investment here. Now, when it comes to product-led growth, here I think the typical the ticket sizes are also very less.
Right.
So it's basically around starts from as low as 1K, or even lesser than that, and then basically
Right.
you can go probably to somewhere around 10K kind of on a monthly basis.
Right.
And here I think it's not much of a big risk for enterprises to
Right.
go in for that. In fact, there are quite a few SaaS companies which are even offering less than it's as low as like 100K per
Right.
month kind of a ticket size. So there, if typically it's on a monthly basis. If things don't work out, they can switch off that particular
Right.
thing at any point of time. And when it comes to the combination of product-led growth and outbound, so here I think the uh, the salespeople from the startups, they kind of make that, they allow the customer to, let's say, do a free trial
Mhm.
and like see how they are behaving. There are a lot of analytical tools for understanding the behavior of the customer in their particular
Right.
platform, and accordingly they can suggest as to what their interest levels are, and then like suggest some more values that they can provide to the client. And again, here the ticket size is slightly higher than a completely product-led growth. But again, here the enterprises would kind of have a kind of flavor of what their solution is.
Right.
Now, what I also see is that when it comes to enterprises, it's typically very hard to crack. Whereas when you come to the SMB space, I think it's
Right.
much more easier to penetrate into those
Right.
markets. And what I also seen is that the probability of penetration into the US markets in the SMB space is much higher as
Right.
compared to penetrating into the SMB space in the
An
Indian
emerging
market.
market.
Yeah,
Right.
that's right. And basically but the margins again that you get in the SMB space in the US versus in India, I think you
Right.
get a better margin in the US markets. So
Right.
that's another observation that I've seen.
Very interesting. Rajesh, I would love to talk to you a little more about the US market, right? But before I do that, right, I'd love to understand a little more about your portfolio, right? Typically, I mean, you're somebody, you essentially a professional, right? Who's really seen these gaps, right? While you've interacted with many of these corporates, right? And I think that's an intelligence which is very critical when you look to plug in a solution in an environment, right? So tell me a little more about your portfolio, right? And second, how do you maintain that cool and calm, right? Of not wanting or not getting down to the field and starting to back yourself, right? And I'm sure that's a very it's a temptation that given you what you've done for a very long time with IBM, right? There must be a strong temptation, right? Where you want to sort of get down to doing it yourself, right? Evangelizing, talking. Uh, which is very different from a very typical VC, right? Who would want to maintain that distance, observe all of those things, right? And I personally believe I think this is very critical, right? Bringing that operational intelligence is very critical, right? Something that you also alluded to in one of your earlier points, right? Tell me a little more about your portfolio, right? And that relationship that you've been able to build with them in the course.
Yeah, so basically, so we have right now made 22 investments currently across different verticals and enterprise functions and
Right.
different horizontals. We have made investments in sales and marketing, legal, HR, verticals in like healthcare,
Right.
energy and utilities, digital media. In terms of horizontals, like we have made in AI, cloud, security. So and then we have closed 5 more term sheets on top of it, as I mentioned,
Interesting.
and out of these 22 investments, we got 3 exits,
Right.
uh, and 5 of our portfolio companies have got their up rounds from the likes of B Capital, Matrix, Nexus.
Right.
I'm expecting a few more up rounds in the coming months as well. So I think all the portfolio companies are doing pretty well. So whatever experience that I have gathered, I think as an operational role, right
Right.
from whether it's got to do with technology, whether it's got to do with a tech specialist implementing things, to sales, pre-sales, and
Right.
channels, and business development. So all that experience is coming in handy when I'm working with the portfolio companies. So
Right.
and as I from 2014 onwards, I've been just focused on B2B startups,
Right.
and I have seen more than like 1,500 B2B startups in this particular space, so kind of know how where if a B2B startup can how they stand against the
Absolutely.
competition and how what's their
Bringing
uh,
that expertise together.
expertise together. That's where I think like
Phenomenal. And
yeah.
I
So
think I've had the opportunity of knowing you, Radhesh, right? So I know the calm side of you, right? And I understand, I think you somebody I've always respected for the balance that you've been able to maintain, right? Otherwise it just is so much more complicated, right? Especially when you come from an operating background where you understand, a variety of nuances, right? And when you are a founder, you just cut differently, right? There is a very different chase, right, that you're doing, and I think that balance becomes important. Rajesh, I'm going to move to a more important question, right? And I think COVID has been a very, like I'd mentioned right at the outset of our conversation, right? It's been a very difficult time, right, for I think each one of us at a personal level. But professionally, right, while of course there was a lot of disruption that happened at the beginning, right? A lot of these things have stabilized, right? I think that's number one. Number two, I think globally now, we're becoming a very agile market, right? Especially in a B2B environment, right? The responsiveness is much higher. A lot of B2B, a lot of large enterprise clients have realized that startups are better prepared to give them very quick solutions, right? So they're not necessarily now looking at the larger players to solve for smaller problems, right? They're very open now. There's a very different kind of an expectation or relationship which is now kind of playing out, right? The decision making is much shorter, right? The trials are much faster. The implementations are much quicker, right? So, we're seeing a very different phase, right? I mean, something that we were ideally seen in a 2030 sort of an environment, right? Say 10 years from now, has essentially happened in 1 year, less than 1 year, right? What's been your experience, right? Across your portfolio, what's been your experience, right? And is this something that you're seeing? For example, I interact very closely with the India market leaders, right? But is that something that you're seeing across the board, across, say, larger US, Europe, other markets? What's your sense of it?
yeah, so what has happened is that when the COVID first hit around 2020 March timeframe, that's where I think that there was a slump in the sales, especially people were especially I'm talking about a lot of
Right,
this enterprise SaaS solutions which would sell directly to enterprises or SMB space. The
right,
people would expect a certain kind of an interaction or a face-to-face kind of a discussion to happen, and that's where I could see probably a little slump there.
right,
But as people, enterprises realize that maybe the new way of working is all digital, that's where I think
right,
it started picking up. And so in terms of all the sales that has been done post May kind of time frame last year has been primarily digitally driven. So all the
right,
meetings happening through Zoom, all the demos happening through Zoom, all the POCs, pilots, everything happening
right.
remotely, and that's been pretty working out pretty well for the portfolio companies as well as for the enterprises also, and actually in a way kind of also save a lot of their traveling cost and a lot of the traveling time as well.
Right.
So I would say that the new norm, even if once the COVID is down, I think a good substantial sales will be happening.
Right.
I think digitally is what my sense is, that people may not be really hell bent on actually having a
Interesting.
face-to-face kind of a discussion.
Fantastic. I think that's a constant. I think each one of us agrees to, right? Uh, Ravish, I'm going to take a side step, right, and I'm going to talk more about. I mean, given that the stage that you enter in, right, and all the expertise that you bring in, right, I would want to understand a little more about the investing side of things, right? Right, and especially in a post-COVID environment, right? So, how has, for example, your evaluation of startups changed, right, in a post-COVID environment, right? Given that you entered at a very early stage, right? You're literally sort of coming in at a seed and a pre-series A. I mean, that's the stage that you're kind of coming in, right? I want to understand, what has changed in a post-COVID environment, right? So today, for example, in a pre-COVID time, if you just look at a startup, right, what were some of the key aspects that you should look at, right? Today, when you are to look at these startups, and I'm sure you're evaluating quite a few of them already, right? You must be in advanced conversation, right? What is it that you're looking at, right? What has changed in the process in terms of your evaluation of these subjects?
So I would say that there are certain themes that keep coming up, and like for example, I would say last year the privacy ops was a very strong theme, and with all the GDPR compliance and all that, and
Right,
So we kind of invested in a company which was around, which was in the same space of privacy ops. And if you right now look into the current themes, like some of the themes that I can talk about is analytics around finances and forecasting and budgeting.
Right.
Uh, so that's I think there are quite a few players are there, but they're focused on the enterprise side. But in the SMB space, there are very few companies who are tackling there. Uh,
Right.
so other theme is the digital adoption for companies, and third could be uh, customer success. That is a new age customer
Right.
success solutions. Fourth would be the future of works, especially in with a once the COVID is done,
Right.
how enterprise would interact with their clients, and any solution that enables that mix of remote working as well as working in office,
Right.
which enables to do that. So that's and actually we see last year around October November timeframe,
Right.
you could see a lot of these solutions around which were having solutions around conferencing.
Right.
So bunch of this like huge investments came into. So
Right.
I think the theme would keep on varying, but I think it's a very variable now, variable in nature. But at the moment, these are what currently we are looking into it.
Interesting. You know, I kind of agree with you on a lot of parts that you mentioned, Radhesh, right? But I have I have a fear, right, in terms of tracing back, right, of many of these adoptions that have happened in the last 1.5 years. Of course, I think mindset is shifted, right, on the consumer side, right, in the decision making side. But I think there have been few aberrations, right? There have been few trends which have really flown largely because of a thought that COVID is the new constant, right? But I think the other stakeholders in the game who are invested very heavily in certain alternatives, right, are kind of pulling it down, right? EdTech is something, for example, we're seeing that already, right? Many players who've invested in, for example, the infrastructure, right, are essentially ensuring that there is a very quick, readjustment towards towards the utilization of the physical infrastructure and so on and so forth, right? And that's something which we're going to see across the board, right? But Radesh, what I want to more, what I want to, understand a little more from you, right? How, for example, in a post-COVID environment, right? How is the founder mindset, for example, right, in your assessment of the maturity to tackle a B2B environment, right? How has that, for example, changed, right? How do you, I mean, do you think what existed in a 2019 kind of an environment will continue to be relevant in a post-COVID environment, or do you think this is a situation which is going to require for a very different kind of maturity, right? A different kind of an understanding, given that you're not in a physical environment anymore, right? Uh, the ability for a founder to go out, communicate, understand sensitively, and create trust in delivery, right? Do you think it's the matrices around all of that has kind of changed? You would look at a more mature set of founders today, and I think that's something that we're seeing across the board, right? More mature founders are getting funded, right? Do you think what do you think are is there a shift on the in the founder assessment, right, in the mindset assessment that is required to build a strong sustainable business, right, in a digital ecosystem? What's your sense of
No, no, absolutely. I think founders' background and the maturity definitely is extremely important. In fact, most of the portfolios that we have invested, the founders would typically have around 5 to 10 years of experience in that particular domain,
it? Right.
and so that's super critical in terms of what expertise that they bring in to that particular portfolio companies. And I will
Sure.
give you some examples in terms of how portfolios have been coping up with
Right.
post-COVID. So initially, when the first wave came in, they were like, I think quite a few of them actually took a decision to work remotely,
Right.
and the results have been mixed actually. For some, it
Mhm.
has really worked. They could see better productivity. For some, actually, it was like not that productive.
Right.
And the second wave came in. Actually, there was like quite a few founders lost their few of the team members. Actually, that was
Right.
quite or the
Right.
team members. Very close families and all that. So that was quite traumatic for actually the team and obviously the founders. So what they kind of they continued to work remotely, and then they continued to operate remotely with whatever. And there was 1 month, I think it was like extremely difficult for
Absolutely. Right.
most of the founders. And post that, what is happening right now is that few of the founders have opened up their offices,
Mm-hmm.
and they have actually given the flexibility of working certain days from the office and certain days from home, at least to kind of like a good mix. And actually, there are some founders who are saying that it doesn't matter where you want to work; it's
Mm-hmm.
completely up to you whether you want to come to the office or you want to work remotely. So that's how they kind of have been operating. It's been a kind of mix of how they're dealing with their particular team operations, and I think just off track, I think the new way I think is going to be digital nomads, where
Right.
some people will be always roaming around different parts of the world and working
Right.
from working for their office. So yeah, just a off track comment. But yeah, in terms of the sales and all that, currently it's all digitally done.
Right.
But I think once, let's say, the COVID subsides, and that point of time, I think I can definitely anticipate people to go in for their respective meetings with their potential clients and all that stuff. So that at that point, I think it's all going to be.
Interesting. Ramesh, when we talk about, when you, as a core thesis in your fund, right, at Arka, is essentially you are looking at companies which have, say, an Indian operation, and you're investing. They're essentially operating and acquiring customers in a more mature market, right? Because largely there's a higher ARPU, right, and those are markets which are essentially DIY markets, right? Uh, and we've continued to sort of talk about the cost arbitrage, right? And I think that's essentially what the entire outsourcing play was built on, right? But I
Yeah.
think today the expectation is kind of changing, right? The expectation is becoming much higher. I think that's one side of the game, right, from the startups, right? And that essentially means that you know, even if you, for example, have your base in India, right? Your cost of, for example, bringing in right kind of human resource, which is also now becoming a very important mode in the process, right? It's
Yeah.
going to go up. I mean, we're seeing that across the ecosystem, right? I mean, tech is becoming extremely competitive, extremely expensive, right? We're seeing bizarre, for example, salary outflows that are happening in the environment and so on and so forth, right? Do you think that I mean, we will have to start looking outside of the cost arbitrage play, right? We'll have to focus more on the solutioning play, right? And I think and do you also feel that the relationship between organizations and startups will have to eventually change, right? It will not possibly be, it will be transactional, right? But it'll be transactional plus plus, right? So do you see emergence of new models in that relationship? What's your sense of that?
Yeah, absolutely. So if you look into the first question around whether only focusing on cost
Sure.
arbitrages, does it make sense? Absolutely not. One has to look into other alternatives around
Right.
product differentiation, or
Mm-hmm.
basically the way of delivering the solution. These are some of the other areas where companies can focus on. And I think
Right.
India is in a right cusp of getting that expertise.
Right.
I mean, I've seen so many professionals and who have been working in MNCs, and they
Right.
leaving their jobs and then starting their own startup and coming as founders. So from a and there are quite a few companies, quite a few founders in the US, for example, they are having very strong expertise in their area of work, and
Right.
they set up a company there and with operations in India. So I think good set of IPs are getting developed in this whole process.
Interesting.
And in terms of cost arbitrage, also what is happening right now is that a lot of money is getting pumped into this into the ecosystem. So
Mm-hmm.
there's a lot of good money there, which is a good thing for obviously the ecosystem, and that is actually allowing the ability to pay more payouts for employees, and that
Right.
has actually led to an increase in the salaries. And so quite a few companies are, what they're doing is that instead of going into the metros, they are now focusing on to like
Tier two,
tier
tier
one,
three.
tier two cities, and so
Right.
now I think the norm is that they can work digitally from anywhere,
Mm-hmm.
and that has actually resulted in good talent acquisition for quite a few of the companies. So that's another way of dealing with this whole shortage of good talent.
Right.
Uh, and with regard to the second question, sorry, I forgot what was the
My
second.
second question was, do you see a different kind of a model, right? I mean, cost arbitrage, do you see, for example, companies are now becoming very sensitive, right? To the way basically their outlays are, right? In terms of, say, consuming a lot of tech products, right? A lot of SaaS products and a lot of specific products that are required in their entire, value chain, right? Is there a different model that you see emerging, right? So
So
it
yeah,
could be a fixed price plus plus, right, and a variable income. I mean, do you see that coming in?
oh yeah, absolutely, absolutely. The kind of very innovative in terms of how new
Sure.
pricing models are coming up.
Right.
Like you have the typical freemium model, then you have the next slab, which is the paid model, and then you
Right.
have the enterprise slab, or basically the unlimited slab, and then you have the not unlimited slab, but you have more features into that
Right.
the third tier, and then basically you have the fourth tier, which is typically the like it's basically custom pricing that they will provide
Right.
for large enterprises, for especially if it comes to like they have a large license requirements and stuff like that, and so that is there. But there are other models where they are saying that based on the percentage of benefits that you can realize, for example, if we are able to cut down the cost by some 10%, then you
Right.
got to give us based on that
Interesting.
savings or the value. For example, you
Interesting.
increase the revenue from X to Y, then we get a percentage of that. So that's also another very interesting model that are coming up. Quite a few companies are working through that. So yeah, I mean, and obviously the MRR, ARR, and those things are also there. And then we have one company called Nirmata, which is actually released their open source product
Right.
completely free of cost. And remember those MySQL days where it was completely open source, but
Right.
you had products which were having surrounding solutions around MySQL, and that was
Right.
offered as a commercial product. So that's what Nirmata is doing currently. So completely release a free open source product, and then having a commercial product around those open source products. So that's pretty much quite a few companies are also trying that particular model as well. So yeah, I mean, as we see right now, we can have different models that are coming up, and then
Very interesting. Radhesh, I've been looking at, what's happening, right? And like I said, I've been talking to many people, right? I've been talking to many founders. I've been talking to many investors. I've been talking to many professionals, right? And yeah, and this is across the board, right? I mean, this is something that is happening in India. This is something which is, and these are people who spread across, right? In India and outside, right? Now, one thing which is I think a constant across I think each of this conversation is that the consumer landscape is becoming very very dynamic, right? Right. I think arbitrage between countries, between cities is kind of going away, right? Paying capacity is still an issue, right? But I think consumption, arbitrage, and at least aspiration is something which is kind of almost matching, right, across all of these markets, right? In fact, that's something which is I mean, so what the kind of trends that you see, for example, in a US like market, you're essentially seeing, very similar trends in our tier A market in India, right? And then a tier two of a developing emerging nation is essentially sort of now matching up to the aspiration of the tier A market, right? So, like I said, I mean, the arbitrage and the gap that exists is kind of coming together globally, right? And not just, say, for example, in an emerging market, right? Environment. Now, what is happening is that, given that this entire complexity is now kind of building up, right? This aspiration is building up, the consumption is going to become far more dynamic, which essentially means that we're not going to be organizations which were designed to cater to a consumer's requirement, right? And with a product, right, it's going to eventually play out in 4, 5, 6 years, is now going to reduce to just about 18 months, 24 months, right? And there's going to be a massive amount of pressure in the entire supply chain, right? And the expectation, product development. I think pretty much all of that, right? So given the kind of dynamics that organizations are going to see, do you see and do you feel that startups which are essentially catering to more mature environments, right, more mature businesses who are eventually consumer facing businesses will have to operate far more sharply, which could also mean that they'll have to set up their uh, offices within closer proximity, right? Their entire process of engagement will have to be much higher than what possibly exists. They might have to sort of that the expectation on the larger clients to improve is essentially going to have a very significant rub off on the startups in terms of whatever offering that they have. They'll have to build in features very quickly. They'll have to adjust, customize depending on the requirement of their larger business partner, right? What are your thoughts about all of that?
Yeah, so I think a very good point, Ashu. I think a very like my observation with especially the India B2B, India US cross-border companies. Most of the companies are very good in the product.
Right.
I think their ability to roll out new features is extremely
Good.
to the point
Right.
and basically keep to the schedules. What the major help that they need is towards sales,
Right.
and I think a very valid point in terms of having offices and closer to the customer is extremely critical. And
Right.
so what founders do is that if one of the founders is, for example, already based in the US, then that's perfectly fine.
Mm-hmm.
And otherwise, typically, if all the founders are based out of India, then one or two founders will make a decision to migrate to the US
Right.
and operate it from there. And I think from a SaaS company perspective, the first initial sales has to be done by the founder,
Mm-hmm.
and then once they get a playbook ready, then
Right.
that's something that they can pass it on to whoever joins in. I think no one knows the product and no one knows the value as good as the founder. So,
Right.
so it is basically they who will have to basically articulate that and get the initial sales, and then make it as a process by which there can be
Interesting.
given to their set of employees. So typically, what happens is that obviously now when they're raising a seed fund, they may not be in a, most of the founders startups may not be able to employ a full-time sales person in the US. So that's where it's very important. Now, obviously now the scales have changed, and now I think the seed fund is I think now north
Right.
of 1 million, but I'm talking like when let's say the seed fund is around 500K kind of a range that they get in. So that's when they have to kind of get those initial sales
Right.
from themselves. And once they see some sales and some increase in the revenues, that's when they can hire local sales teams.
Interesting. Interesting. Alex, what do you make of the current liquidity situation, right? I think a lot of people, we are seeing a lot of money move into product startups, right? And there's some great product startups, by the way, which are coming out of India. Very, very interesting startups, right?
Absolutely.
I'm sure you're living with that day in, day out, right?
Yeah, yeah, yeah.
What do you make of the liquidity condition, right? I think that's extremely high, right? The valuations, when you hear of them, when you look at them, to an extent are unreal, right? I would stop short of calling it bizarre, but very unreal, right? Uh, do you think it's valid? Do you think it's justified, or do you think it's basically money playing out, money in one pocket playing out the money in the other pocket, right? And this could also be a reflection of FOMO, right? What's your sense of it? I mean, what do you make out of this liquidity condition, right? Uh, and is this something which could survive for a much longer time, or is this just an aberration which we're kind of experiencing?
Yeah, so Ashu, when initially when this COVID was hit,
Good.
my sense was that the valuations will, the funds will like kind of go a little, the funding will activities will go down,
Right.
and that's how the valuations accordingly will come down, and that's what it actually happened for I think 6 months, 6 to 7 months
Right.
post COVID.
Right.
But later, what I observed is that the valuations were steadily increasing, and in the last 5 to 6 months, it has really gone up.
Right.
And my sense is that it's difficult to attribute to any particular factors for that, but I think one factor could be that funds flowing in China that
Right.
has reduced given the whole situation for large startups there in terms
Right.
of how the regime is working with the startups in terms of crackdown and
Right.
stuff like that. So uh, funds are skeptical to go inside China, and that's
Mhm.
where it's getting diverted to India, and
Right.
so that's how a kind of a good uh, valuations have more fund, and that's how automatically it increases the valuation. So in a way, it has turned out to be good for the Indian startup ecosystem.
Right.
And so basically, as I said, as a seed round, one can now easily expect north of 1 million check sizes, and people are no longer calling a 4 million to 5 million round as a series A. It's now
Right.
probably they are now calling that as a seed. So
Right.
and with so more money, more power for the startups, they can hire people in the product, hire people in the marketing, hire people more in the sales. So in a way, it is turning out to be extremely well for the startup and the people in the startup ecosystem. And actually, that's coming to the point about increasing salary. So this is one of the reasons why the
But
salaries are also shut up.
Rajesh, I mean, the very key fundamental point is, right, is this sustainable? Is this, like I said, right? I mean, a lot of this is very unreal, right? A lot of this is sustainable, right? Because a lot of these companies will build up those costs, right? And we've seen some examples, right, where there are companies which are touching almost like $1 billion plus valuation, right, and are finding it extremely difficult. People are questioning their motive, right? People are questioning their product, right? And people can actually today see through the cosmetic layers that have been built, right? I mean, founders, of course, going out and talking much, many, philosophical things and and all of that, right? You know what I mean, right? But it's not value which is getting delivered, right? So is this sustainable, right? I mean, is the function of a startup to go out and raise consistent capital or capital consistently, or is it to acquire a customer, service a customer, build very tight revenues, have a product thesis, factor in evolution, right? Uh, by understanding how the requirements in the business want to change. I mean, what's your sense of it, right? Is this sustainable? Long and short of uh, this entire nuance is that is this something which you think is sustainable?
Yeah, so I think a good question, Ashu. But for a B2B perspective, what is happening is that typically if there is a funding that is coming in, especially large funding, they would normally have a good set of customers already working for them, and then
Sure.
some revenues that are flowing in. So they also have proven certain business model and
Right.
some traction there. And I think from their perspective, if more money comes in, they can turn the tides towards increasing the revenues and the scale.
Hmm.
And like from a seed perspective, again, the seed rounds may not be a very large ticket sizes here. So
Right.
I mean, so at the max, again, this can go back to the pre-COVID kind of a situation. Where,
Interesting.
so not much of a difference in terms of in the earlier round. So I think from
Interesting.
a B2B perspective, I think the valuations are definitely increased, but there is a some logic to the the business models and what revenues they protect.
I think fundamentally Indian founders are I mean you we look at basics, right? And so I kind of agree with what you're saying, right? I mean, I understand where you're coming from, right? That I think founders, it's not a problem. It's not a founder side problem, right? I think there's a certain induced behavior, right? But I think I'm going to stop short at that one, and then we possibly reserve that for our next conversation, Radhesh. Uh, Towards the end of the conversation, Radhesh, right? Um, I mean, what do you make out of the next 2.5 years, right? How if you were to give an advice to many founders who are working hard, right, who are across say India market, serving the India market, looking at the more developed markets, right, across the spectrum, right, what will that one advice be, right, that you'll have for them, uh, given the current situation that we are at, right? There's a huge market globally, right, which is going through a very interesting phase of transition, right? There is a lot of money which is available for great businesses, right? Uh, a lot of people who have the experience, this could be the perfect opportunity for them to start out, right? Where they're not necessarily in that risk zone, right? Which earlier used to be the case, right? What will that advice be? Say one or two of them, right? Or suggestions that you want to make to founders, right? Who are out there who are building for, a large market. What will that advice be?
So I would say the first look into the business problem
Sure.
and how uh, large that business problem is and how uh, painful that particular business problem is.
Right.
And the more painful and more large the business problem is, and more better for you to uh, build a solution which solves
Right.
that particular business problem. So that is one. And typically what I've seen is that founders who are working in corporates and MNCs, they see that particular business problem and then they take the plunge to solve that particular business problem. Second is that once you have identified the business problem and how you're going to solve it, you got to look into the competitive landscape. If there are a lot of players there, I think then you have to think about how you're going to differentiate against these players, whether through uh, cost differentiation or IPs or product differentiation or way
Right.
of customer servicing. So that's the other aspect that one has to think about and see that how they can differentiate. And these are the basic two fundamental things that they have to have in place. And the third thing would be then how they can go about executing that, whether they
Right.
can would like to have, how they can build the product and how they can
Right.
sell the product and how they can market that particular product. So these are the that comes in the third part. That's where the team comes in, super critical, and they have other founders, how they are collaborating and how they are complementing each other.
Right.
And typically what I've seen is that one founder would be good on the sales and one founder would be good on the technology part, and he would be the
Interesting.
CTO kind of thing. So that's how the so basically the top three advisors which are given.
Fantastic. Fantastic. Radesh, we wish you all the very best. I've had the opportunity of knowing you, right? I mean, I think there are very few people, who are as kind and as, sharp with their understanding, right? And I think that's essentially what, to me is required when you're an early stage founder, right? When you're building it out, I think it requires a lot of patience. It requires a lot of handholding, right? And I think if you can have people on your side who've been through that curve, right? Who understand sensitivities of a larger uh, enterprise customer, right? I think that's what early stage businesses which are building products, right, for in a B2B environment, right, need, right. And I think if I am, for example, one of those founders, I would definitely come to you and raise my round from you for all the goodness and all the experience that you sort of bring to the table. Rajesh, it was a pleasure to have you with us. Thank you so much for taking the time out.
Thank you, Ashu. It was a pleasure talking to you as always, and appreciate your time as well.
Thank you, Rajesh.